and more importantly, what it means for your investment opportunities. Jack Lowenstein, Joint Chief Investment Officer at Morphic Asset Management, joins us from the city here in Sydney. Hi, welcome, Jack. Good to see you there.
It's been a long time.
Yeah, it has been. Financial markets only slightly nervous about Italy. Should they be more concerned?
Look, I think the bond markets have already spoken. We've been shorting Italian bonds, and the yield on those bonds has gone from about 1.7% in mid-April to 2.3% today. That's a big move for a 10-year bond. I think that there is some reason to be concerned about the outlook for Italian bonds, but I think what we find very interesting is that the euro has also sold off, and we see no reason to be concerned about the euro. We think the euro should strengthen.
Why do you see the euro strengthening when there is this uncertainty, when some are saying, yes, Italy is too big to fail, but also too big to save if need be?
That's nicely put. Look, first of all, I don't think Italy is Greece. We're not talking about a country that's teetering on the brink, the way that Greece was a couple of years ago. But the reason why we say that the euro should not be selling off is because even if Italy did leave the euro, that should be a positive. Essentially, if Italy left the euro, then the weight taken by the German economy in the eurozone would go up substantially. And the reality is that if we had a Deutschmark again, it'd be a lot stronger than the current euro. So the euro should actually go up on that basis. You know, as I say, I want to stress, we don't think Italy will leave the euro, at least in the medium term. But we do think if it did, it would be a positive for the euro, not a negative.
All right. I'd like to just play for our viewers a little something that the U.S. President Donald Trump said a little bit earlier today. This is on North Korea.
Gaddafi, that was a total decimation. We went in there to beat him. Now, that model would take place if we don't make a deal, most likely.
Well, what Donald Trump went on to say was that he is throwing doubt on the fact that this summit will happen in Singapore next month. He's saying that it could happen, it's possible that it could not. Really sort of giving himself some wiggle room there. Are you an optimist or a pessimist when it comes to this magical summit, peace on the Korean Peninsula, denuclearization by Kim Jong-un, and all steam ahead for the Korean economy?
Well, you can mark me down as a pessimist for all those things. I mean, first of all, I think that we wrote a blog on this late last year. In our view, there is virtually no prospect of reunification on the Korean Peninsula, and that is because nobody actually wants it. You know, there are 6 players in this game. There is South Korea and North Korea. South Korea can't afford it. North Korea doesn't want it because it would mean they lose all their privileges. China doesn't want it because it doesn't want a nuclear arm, or sorry, a US-looking Korea on its doorstep, nor does Russia, and the Japanese don't want it because that would probably mean that there's a prospect of the US retreating from the region, and then of course America wants to have that forward base it has in Korea, so it's never going to happen. Now, we've been shorting some of the hope stocks. You'd be amazed how much hope there is in this market now. So since talk of this summit started, some stocks in Korea have gone up 80 or 90% on the hope that there will be.
What?
Well, the biggest one has been Hyundai Engineering Construction, which we are actually shorting. That's gone up nearly 80%, just on the hope that at some point in the next 2 to 7 years there'll be an increase in work for Hyundai Engineering Construction on infrastructure building in North Korea. Never going to happen. And to us, it's quite extraordinary that the stocks have gone up so much on hope, so we're now shorting it.
What other sort of sectors have stocks gone up in terms of hope in Korea?
Well, there's a company that's involved in building railways. It's built the Korean high-speed railway network. That's gone up even more. Those are the kind of companies, basically companies that are associated with infrastructure build in Korea. Now, the reason why we're so dubious about this is part of the fact we don't think reunification would take place. Even if it did, it would be years before that kind of work started. And when it did start, the Korean engineering companies would find themselves competing with the Chinese companies, who are much lower cost anyway.
Right. So is there a way to play this story in the Chinese market as well?
I haven't thought about that one. Probably not. I haven't seen any sign of this kind of enthusiasm happening in similar Chinese companies.
And how about in Japan then? If you're true and pessimism is the way to look at this sort of prospect, and if Japan is negative on any sort of hopes and stands to benefit perhaps if there's no peace on the Korean Peninsula?
I think that there's been little impact on Japan, and I think that will remain the case because, as I said, I don't think it's going to happen. And I don't think people in Japan are getting excited about it either way, to be honest. I think the really interesting thing is that Korean retail investors appear to have really bought into the dream, and we think they're going to get a hiding.
Yeah, all right. So that's an interesting one. So when it comes to, I suppose, the geopolitical risk around Korea and the pall that it sometimes casts on global markets, do you anticipate that this will continue, or do you think that markets are pretty willing to look through this talk about Korea because so much of it is unknown and that Korea has not ever really come to the table before?
I think that's absolutely right. I think that from a global geopolitical perspective, Korea will continue to be a nagging concern, but not one that affects day-to-day stock market movements and so on. It's too remote a possibility to be really factored in.
When it comes to some of the political risks, though, in the U.S. in particular, I mean, so far, again, financial markets looking through a lot of the talk around U.S. President Donald Trump and the Russian investigation. When does that come home to roost, if at all?
Well, I'm not a complete expert on this, but there was a very interesting piece in the Washington Post a couple of days ago, which said that Mueller's the special prosecutor Mueller is likely to deliver his report in late July or August. The reason why there's some degree of confidence about that timing is that there's a convention in the US which is that you don't deliver this kind of report in a way that will affect upcoming elections. There are the midterm elections in the US much later in the year. So, and Mueller's a stickler for protocol. So I think that's probably correct. I don't think any of the findings in that report are going to be very comfortable for Trump, but nor do I think they're going to be a great surprise to markets. So my view is it might be a couple of day wonder, but it won't be a big thing.
All right, so that is also happening in the traditionally quiet period for North American financial markets as well, being the summer period in the Northern Hemisphere. Okay, Jack, we've covered pretty much the entire globe. Thank you so much for your time today. Really appreciate your insights.
It's been good to see you. Bye-bye.
Jack Lowenstein there joining us from Morphic Asset Management. We'll take a short break. When we return, we will check in on some of the big corporate stories of the day. Back in a moment.